Hello and welcome to Options Guy TV. My name is Brian Overby. I am your host today. We're going to probably go 20 minutes. The markets are up, which is a little bit interesting to me. Not quite sure why. This morning, I guess it was the fact that Trump sent out a social media post saying that don't panic. I think that would be about the only reason why. There's definitely a lot of reasons to panic, not necessarily based off of the trade war, the fact the government is shut down. There are, one second. So here, my paper fell down, but here's one of the things that we are not going to see this week. We're not going to see retail sales. We're not going to see jobless claims. We're not going to see hourly earnings. We're not going to get any of those reports because the government is shut down. The Fed is going into a silent period, and they have no data to opine on because we have a government shutdown. And as of right now, there's no real indication as to there's no headway. So there's zero expectation as to when it is supposed to open. At least that was before the open today. Haven't seen if anything has popped up because every single half hour, new news is hitting the markets. Oddly enough, last week, the only two sectors that were actually up from looking at the spider indexes that represent sectors was the consumer staples actually held its own last week, and also the utilities. Now, the utilities is obviously a data center play, has everything to do with AI. That market has been really strong overall. A lot, just energy in general has done well, and I could see it even doing better. So I don't mind leaning into that energy level or that energy sector, stocks, wherever you want to play it. But today, I'm going to come in and just talk about volatility. I'm going to talk about the market. Okay, the market's up. We're going to lean into the market. Want to get a trade off right away. This is a 0 DTE trade inside the SPX. It's cheap. Why? Because the VIX is up. And the VIX has actually held its own. And I got a trade that I'm going to want to do in the VIX here in just a second. Some unusual option volume that we have in the VIX. But let's start by looking at the S&P 500 index. All right, let's show the options play platform and SPX here. And so my trade is I want to sell some at the money option contracts. And right now with the SPX, looks like we were up and now we're down. So we've been volatile within the day even. The high so far today was 6,654. We are now at 6,627 is where we're trading at. So with that market right at 6,625, we're still up on the day. Let's make our middle strike. Yeah, there isn't a 27. So we're right in the middle of the 5-point strikes. Let's do the 25. 6,626 is the live quote. Let's go here. Okay, 25. I'll lean a little. I think I kind of want to do the 30s. Yeah. I really wish it was at a strike. I wish it was at 25 or at 30, but right now it's at 27 and a half, 20. Okay, let's do the 30s. Now it's at 28. Let's do the 30s. Okay. 1 day. 0 DTE. We're going to do this 30s. So we're going to be 5 points here. We're going to be selling the 20. We're going to be selling the 30s. And we're going to be buying the 620. Okay. Buy. Too many legs. 1 second. I think it's around $3 is what I'm guessing because the vol is up so much. Sell 2. Buy 1. 340. I thought it would be closer to 3. 340 right now. And the VIX is 2023. That's where the VIX is trading at, $20.23. Actual market is 6,630. We're selling right at the money. Yep, this is it. This is the trade. So here's our paper trade for the day. And we'll be back on Wednesday to look at it. And I'm going to put this trade on personally, but you got to get it on right now. Don't want to pay more than $3.40 for it. Really don't. So we're going to keep it at $3.40. All right. Buying today's expiration, the 13th, 6,620 strike SPX option, selling 2 of the 6,630s, buying 1 of the 6,635s. That means this thing will trade for $5 above and beyond that highest level strike. So from this point on up, we could make $1.60. Is that what it's saying? Yep, $1.65. Change this up a little bit so now you can see this here. So it'd be $1.65 anywhere above this level, depending on where you get it filled at. And below the level of maximum we can lose is this $340. It's pricing it at $335. And then here's our max upside right at the middle if it lands there. Put the trade on now, out by 2 o'clock. If the market goes against you, you're definitely out. If you put 2 on and you wanted one to run a little bit because our forecast was correct, that's okay too. But that's the way I would totally play this trade. Pumped up volatility makes this cheaper. I really wanted it to be $3, but now it's $3.40. And it was $3 earlier, but $3.40. All right, that's trade. That's paper trade. Any questions about that? No. All right, that's going to be the official paper trade for the day today. And we're going to come back on, well, we got a whole bunch of Goldman Sachs trades on that we looked at. A lot of time spreads, a lot of diagonal spreads. They're announcing tomorrow. The near-term option contracts expired worthless because the market was down on Friday. So your long call options going into it. And that's the way that I would approach it. I would ride it into the earnings report, especially with the strong market today, and see where we end up at. Actually, let's take a quick peek at Goldman, because that was a lot of the positions that we talked about. And yeah, we've taken back everything that so that was perfect. Oh my gosh, you can't do it better than that. And I wasn't around on Friday. Hopefully you watched the educational video that we did. That was Kurt. The SPX was calls. The SPX was calls. And yeah, we can put that up if you'd like. Oh, that's right. I am not sharing the right screen. Thank you. Thank you. Now we're looking good, right? There it is. Nice. Okay, so that's with calls. Yeah, we're going to do calls. So let's go back and show this trade. Here is the what if calculator. Here is the trade. We are buying the 6,620 strike call, selling 2 of the 6,630 strike calls, and buying 1 of the 6,635 strike calls. Anywhere above 6,635, if we trade this for $3.40, we would make $1.60. This says this is $3.35 when it came in. That's what it took for the midpoint. We're at $3.40. This is the official paper trade. All right. Now, I looked at some butterflies in the VIX. None of them really jumped out at me. I tried to lean, like, what would I do if I was on the put side of things? Didn't mind it. Obviously, our VIX trade is looking really good as far as the call trade is that we put on, saying that the market would basically be above the 16 level. So we're looking really solid in that trade. But right here, if I were to put a butterfly on today in the VIX, I would lean to the call side again, only because the put side was really hard to do. And it's more about where the break even is at. So let's send this to the ticket. Let's go to the trading app. Let's pull up the VIX And this will be another paper trade, but it will be a short-term paper trade. And I'm going to highlight that actually the unusual option volume, that's pretty cool. It's actually showing you that the 35 strike call and this expiration actually had open interest of 220,000 today and a huge option trade that went in. So a lot of people seem to be getting long the 35 strike calls with only 9 days remaining to expiration. And 25 cents is nothing to sneeze at there. So they're highlighting that. And I think that's awesome that the platform shows this. But here is the paper trade. We are going to be buying the 18 strike call, selling 2 of the 20 strike calls, and buying 1 of the 21 strike calls. Trading right now for a midpoint of 66 cents. And that means that if we do it this way, we have 2 points here and we have 1 point there. Minus 65, that means we can make 35 cents above and beyond that level. The market is about 19 and a half is about where the market is. Very close, because if you look at the ask on the call, it's 137 on the 19 and a half strike call, and it's 139 on the 19 and a half strike put. So that means it's very close to 1950. That's where the futures are at. The actual VIX is at $20.23. If we put this trade on, our break even would be 18 plus the 65 or 1865 over the next 9 days. So if you put this trade on, it goes out right at 20. That means that this, if it goes right out at 20, this could trade for as much as $2 minus the 65 cents or $1.35 on the upside. If it goes above 20, well, then you're going to make at least $1 on the butterfly, paying 65 cents. You'd have a 35 cents gain. All you have to do is figure that the market in 9 days would be above $18.65 if that's where it was executed. Send that one to the what if calculator. And this will highlight here $38 if you're above that trade for every 1 by 2 by 1. You have to just figure that the market's going to stay above 1865 if you do this trade. Once again, if I go back and I look at it with the VIX with the put butterfly, you can save you can make a few dollars, only $16 on this trade if it goes to the downside here. So let's see what this one's trading for. We're going to send this one to the market. If you want to get bearish and you want to center it around the middle strike like we did with the calls, this would be the opposite trade. And buy the that's not bad. 21. The market's at 19. Let's adjust this a little bit. Let's pull this in. Let's go 22. We'll go 22 period. So this is if you wanted to get bearish. We're going to go 20, 22, 20, and 20.50, $2. That's $2. Yeah, shoot. Oh, it's too much. Okay, let's go one more. 21, 19, and then this would be 18. Yeah, I can only make 3 cents on that trade then. If you look at this one, you're going 21, 19, 18. So if you think it's going to go at 19, this is worth doing. But not really worth doing if you think it's going to go below 18. Come on. Move it in. Paying 97 cents. The width between the long spread is $2. The width between the short spread is $1. It's skewing the volatility on the puts, making it very hard to do a put trade as far as this butterfly is concerned. You notice that So if it comes in here, does it show us at a net profit? The net profit should be about 3 cents. And that's what it looks like. It looks like it grabbed 97 or 96 cents because you're paying that for it, and the maximum trades for below 18 is $1. If you think we're going to go out at 19, this isn't a bad trade. Your only risk is if the market does spike and stay above 21. And right now, the market is showing that it's around, was it 1950? Yep, or 1850. I'm stuck right now. Apologize. All right. There it goes. 1950, 1850. Yeah, it's between 19 and 1950 right now is where that market is at. And this is the VIX if you want to do the puts. I like the call one better. I like the call one. I still think there's a lot of uncertainty in the marketplace. We had to call position on. You feel free to take that one off if you want today. You got 9 days remaining. You should be profitable on the trade. If you have two butterflies on, I'd maybe close one and let the other one rock and roll. That's also a possibility, and that's the way that I would approach that. Also this week, we had healthcare. We had United Healthcare do as we asked it to. Right? We actually had it come up and fill the gap. So let me grab this area. And we came very close to this gap, right? We hit that point. I'm pointing right here. And look at that. Almost exactly. And we talked about that potential. We actually talked about that potential all the way down here. But then the market has sold off because the biggest reason why the market has came back down, which could be a buying opportunity at this point in time. We got the 20-day moving average right here, and that'll probably provide some short-term support. But if you do think the government will eventually open, and Democrats may get their way a little bit as far as the ACH is concerned, that is healthcare funding, and they want the funding to be extended, and that seems to be one of the biggest hangups. And if the government does open and they kind of get their way, I obviously think that UNH could easily go back to here. And if it does, every time it tests this area, every time it tests this gap fill, it gets stronger, right? It gets harder to resist that stock breaking through to the upside. And then the next move would be the 200-day moving average. And we can add some days. Let's go 1,300 days. So this is an opportunity, and this one would be a political play, basically. This would be if you think the government is going to open and you think that that the funding will continue in the healthcare space, well, then I do think that this would be a possible trade. Just to get long UNH. Let's get long it. Let's do it. Let's do it. We've done pretty well with it. Let's go in and do UNH. Let's get long call spread. Let's go. Okay, earnings is on the 30th. Let's do 11 days. Gosh, I hope we don't go another 7 days without having some resolution in the government. But we're gonna go on this road right here, 137. Let's do the 35. Let's buy this one long, and let's sell the 170s or the 370s. Right there. Okay, 55. So we got 15 points, paying $6.75. That means that our break even is at about 30. Our break even would be 355 plus 675, which would be 361.75. 361.75. Let's make this an official paper trade. Yeah, I like this. I like this trade because I do think that there's still strength in UNH. And if we do get that strength in UNH, we will end up seeing, if we do get that resolution in the government, I think you see it pop up. They just don't like uncertainty. So I think UNH has the potential to make a quick buck in the short term. So this is the way that I would approach it. And that's it for today's Daily Play. If you got any questions, put them in the chat box. And if not, we got the SPX daily play. We got the VIX, and I'm going to lean to the call side on that butterfly. I like the VIX butterfly the best. And then a long UNH trade, hoping for a resolution in the government. All right. That's it for this edition of Options Guide TV. We'll see you this Wednesday to see how everything turns out. 11 a.m. Eastern Time inside the Tradier Hub, hub.tradier.com. Hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.